If you're in my age bracket, then you probably remember playing double dutch. The thing about double dutch was everything hinged on your ability to jump into the ropes at the exact right time. It's kind of like that with trading too. Your entry is by far one of the most important factors on being able to take successful trades. When trading, you need to know when to enter, how to enter, and where to enter. You want to be able to see your trades coming a mile away. And that is exactly what the 21 EMA will help you do. Take the best entries in trading. Let's go deeper. Hey guys, JD here. So how important is entries? Well, how important is air? Okay. All right. It's pretty important. Okay. Your entries are they're up there, right? You know, how you enter the market, when you enter the market, where you enter the market, that's high on the trading list. All right. And so again, we need a tool, okay, that can give us a edge. What you're looking for with your entries, when you're talking entries, you're really talking about your trade setup, right? And you need to have an edge in the market. This is where having an edge comes into play. And the edge is just something that says, with this edge, there's a higher probability that A is going to happen over B, right? Because the market is all random, right? You never know what trade is going to win, what trade is going to lose. Once you enter the market, it's all random. Every trade is unique, right? Every time you enter a trade, the market participants who are in that market at that exact same time is never going to be the exact same participants, all right? The market is filled with millions of people, thousands of banks, you know, thousands of hedge funds, thousands of countries, governments, big businesses, right? So every trade is unique. Even if you take the exact same setup every time, the market participants, when you take that trade, are going to be different. All right. Every trade is unique. So it's all random in the end, but you have to trade in probabilities. Okay. And so when you look at probabilities, there are things that occur in the market over and over again. Like in the last video, this is part 3. Okay. Check out part 2 and part 1 if you missed it. But in the last video, we talked about the market cycle. That cycle happens over and over again in the markets. Most people are unaware of it. All right. But once you learn that market cycle, which is trend break, retest the new high. That's how the market likes to move. The market also moves in twos. So you get a trend up, trend break, retest. That's 2 legs. These patterns happen over and over again. Once you understand that it can see the market cycle, which I hope you can see it now after the last lesson. After you see the market cycle, then you can start to look for high probability trades. All right. And there are 2. Let's just talk about one. We're going to talk about 2 because we're going to see them both a lot. Second entries and higher lows or lower highs. These are high probability trades because they go hand in hand with the market cycle, right? Once you get that trend up, trend break, when you start to retest, that's actually a push down first entry, push down second entry long. So you're going with trend, you're going with a natural pattern that happens in the market, and it's the most opportune time to enter, to go with trend. Okay, so they are right when they say the trend is your friend. That's one of the cliches out here that's actually real. The trend is your friend. But the catch or the caveat though is that you have to know when we're trending again. All right. And that's how the EMA helps us, because it shows us the direction. We can see where we are in the market cycle. And once we know where we are in the market cycle, then we can start to look for the best entries in trading, which is second entries, higher lows, lower highs. All right. Really, you know, second entries, I like to say, is the best. But sometimes higher lows are the best because if you get to second entry, the higher low or lower high always comes after it, right? And so you have actually more confidence to take that trade because the second entry is working, and then you get another high, higher low. So really the high, higher low is probably the best because it's actually the more conservative trade. It gives you got that confirmation from the second entry currently working. But those are the two entries, okay? And so entries are important. It's like breathing air. You need air to breathe. You gotta have good entries, right? And it really depends on the market. All right. So I'm just gonna give you my experience because I'm trading in 3 markets, right? So it's most important in futures. That hands down, no questions asked, because see, in the futures market, typically retail traders are only trying to scalp a couple points. All right. Most of us can't put up, most of us can't risk 10 points at $50 a point, right? So you're trying to scalp. So that means you need to catch momentum, right? So if you're only risking 2 points, 3 points, as soon as you drop that, as soon as you go, you need the market to move in your favor. You know what I'm saying? You can't, if it pulls back, it's probably gonna knock you out, right? So scalping the S&P 500 or scalping the futures, or any of them, your entry has to be on point, all right? Because they're small. I mean, mistakes will be made, but they are costly, right? You have to enter. You can't hesitate. You gotta wait for the candle to close. When you're trading futures, you can't be breaking rules, all right? Because you can't be breaking rules. It's you got to enter when you're supposed to enter, and you really need to catch that momentum. Okay, so entries are the most important when you're trading futures. Second most important, if you're trading binary options, your entry has to be on point there too, because this is really like a scalp. I would say if you're trading a 5-minute expiration time and under, your entries really matter because you're on a time situation, right? And so you could be right about the direction and still lose because you entered 3 seconds after the signal candle, and those 3 seconds cost you. You could be right about the direction and still lose because you got in early, jumped the gun, and if you had to wait for the candle to close and then enter properly, you would have won. Okay, so futures and binary options, the entry is very important. You have to follow the rules, which one rule on entering is always wait for the candle to close. That's pretty much rule number 1. And then, you need to be able to see the setup coming a mile away. So you just take it without hesitation. You know what I mean? So you don't enter too soon because you're disciplined, and you don't enter too late because you ain't scared. All right. You see the trade coming, you see the setup, you see it's a second entry way ahead of time. You wait for the candle to close and then you enter. Boom. And that's definitely how you got to trade in futures for sure, and binary options. Now the Forex entries don't matter. That's the one beauty of the Forex. The way I trade the Forex, I trade a 4-hour chart. We're doing a Fibonacci retracement trade, basically, that we call the sweet spot. And so for that setup, all we have to do is be in the sweet spot, right? So no signal candle required. Very easy trade. This is probably why the swing trading title community is growing and thriving and winning, because there's less ways to shoot yourself in the foot. To be honest, it's a mechanical system. It has fewer rules. We have very few rules. When you get to the sweet spot, you take the trade. We know where our target is at. We know where our stop is at. There is nothing to do until you at least hit target 1. Very mechanical, very easy. Entries, if you're in the zone, you can enter. It's that simple. So Forex is the easiest as far as entries, and as far as the importance of when you end, is we have a lot of leeway because we're in a 4-hour chart, and I like it like that. It's very relaxing. It's very mechanical. I'm already got high stress from scalping futures, scalping binary options, so I needed something a little bit laid back. That's what our sweet spot trade for our Forex community gives us, the nice laid back trading. Set it and forget it, you know what I mean? And then check it, every 4-5 hours and say, oh, we're up. Oh, we're almost to target 1. Now let me pay attention. Easy. Look into that. Swing Trade Talks community. So entries, right? 21 EMA. So how does it show us the entry? I kind of already said it. You just follow the EMA, you follow the market cycle, And here is something that I have said. I mean, it's close to, I've come close to nearly saying it in every video. I've probably said it in every video that had a chart lesson or work study lesson, is that your best entries are on, off, or around the 21 EMA. So let me bring it home now. The 21 EMA, we back to the 21 EMA again, the most powerful indicator in trading, the only indicator you need in trading, the 21 EMA. We're gonna go to some charts. We're gonna finish this video up on the chart so you can see entries, how there's 1,000 of them a day, and how easy it is to take great entries when you use the 21 EMA. Let's go to the charts. All right, guys, so we're on the charts. So here we go. Got a nice uptrend going here, right? At a glance, right? At a glance, because of the 21 EMA, I can see at a glance we're trending up. All right, so now let's talk about entries. You know what? Actually, let me take a screenshot of this. We're gonna do this one a little bit different, so I can mark these entries up for you. Okay, we got our screenshot. So now check it out. Clear trend up, right? Clear trend up. So the market cycle, right? What's the market cycle? Trend up, trend break, retest, okay? So one entry strategy, this is just one you could use, is try to trade the retest, right? Try to trade the retest. And so here's the beauty of price action and the 21 EMA and the market cycle. When you bring it all together, we know that you get a trend up, trend break, retest, and we also know that the market moves in twos. So when you get this, when you're trending up, we're clearly above the EMA. What did I just say, y'all? We are clearly above the 21 EMA, right? Once you get the break here, you know, I mean, you know at this point that this is, we retesting. But look, trend down, trend break, retest new low. Rule of two, that's 2 legs down. What are you looking for after that? So you're looking for a second entry because we want to go back long. We're expecting that we're going to get another leg of this distance. So from this top here, push down, first entry, push down right here, second entry long. Okay. This is a second entry long, but this is a higher risk trade though, because we're under the EMA, right? It's still a second entry long, but it's a little higher risk. Okay. So I'm not going to call this one the best entry, but this just kicks everything off because it works, right? Once it works, then you get a low, push up, higher low. Now we're getting a little bit better. This is still a higher risk trade though, because we're still under the EMA, but hey, it works, right? We can clearly see that we're going higher, but then you get the ball game. You get another low, push up, higher low. Now you have a higher low off the EMA. The best entries are on, off, or around the 21 EMA. So now when you get this candle here, this is go time. You got a target of here. You're expecting to break a new high of here, right? So it's go time. And you're also expecting to get a leg this distance from the bottom to the top here. So at this point, you know exactly what to do, right? You understand the market cycle, but you understand the power of the 21 EMA. Now you just look for second entry longs and higher lows, and they just keep on coming. You can go, you really could go on this one here, but I like the big boy right here better, right off the EMA. Then you push up. Now, this one is a little far away. You may want to sit on your hands. Then you got this high here, push down, first entry, push down, second entry long, right here. Yep, and at this point, you still ain't made a new high. So you're still going long. And when you get this second entry long, boom, that's the homer. Off to the races, okay? Now you get up in this area. You might be too far away, but hey, there's still some wins here because there's a whole bunch of low, higher low, low, higher low, low, higher low, low, higher low, all the way up. All right, boom, all the way up. The best entries are on, off, around the 21 EMA. Okay, then you go into a little range, then we break higher again. I'm gonna consider, look at this one, low, push up, higher low. You might go here. You could go here. The best entries on, off, or around the 21 EMA. You got a low, push up, higher low. You can go here. This one I really like because it broke lower, trapped everybody going short. I don't know why you would go short in an uptrend, but people do it all the time. You can go here, boom. Best entries are on, off, or around the 21 EMA. Try to come back lower again, but you got another low, push up, higher low, big candle came back above the EMA. Best entries are on or around the 21 EMA. Boom. Same thing again, try to go lower again. This is just a micro range. Still got a low. Well, this one ain't really a high, low, higher low, but just a humongous candle back up. Take this one or this one, whatever your flavor. Your best entries are on, off, or around the 21 EMA. Boom. Then here you probably finally get trapped, right? And then we go down. But look, let's say you think like, all right, this is over. I'm gonna go short. What happens if you go short and just take good candles on, off, or around the 21 EMA? Boom. Take candles off, on, or around the 21 EMA. Boom. Take candles on, off, or around the 21 EMA. Boom. Your best entries are on, off, or around 21 EMA. I mean, we can do this all.
Looking for profitable trade ideas in the Forex market? Want to learn a unique strategy based on price action and Fibonacci retracement zones? Join our trading community now for just $10 a month and receive trade ideas and binary options chart markups straight to your inbox.
Day. I can do this all day. Low, higher, low, boom. Best entries on, off, or around the 21 EMA. Right here, best entries on, off, or around the 21 EMA. Boom. I can do this all day. All right. Let's find something going short. All right. Here we go. Let me take a screenshot of this one. All right. So, coming back short. Your best entries are on, off, or around the 21 EMA. So once you break under it here, you can basically start going short. Off the EMA, boom. Off the EMA, boom. This one you get, pretty good chopped on. Pull back, but then look, high, push down, lower high right here, off the EMA, boom. Or if you don't like that one, you can take this one off the EMA, boom. Then you wait for it to come back to the EMA right here. Off the EMA, boom. Take any one of these, any one of these, any one of this, or this one, off the EMA, boom. Then you gotta wait, come back, here it is, off the EMA, boom. I mean, if you don't love the EMA by after this series, I don't know what to tell you. I don't know, I really don't know what to tell you. Off the EMA, boom. I mean, off the EMA, I don't, I just don't know. if this series didn't prove to you why you only need the 21 EMA, then you got another way to do it. And you may have another way to do it with some other indicators that I've never combined or don't know how to put together. And that's great. I'm just showing people the way I know how to do it with pure price action using one indicator, the 21 EMA. And I can show you this in all kind of markets. You know what? Let me show you this futures from yesterday. Hold on one second. Okay, look at this perfect price action from yesterday in the futures. Trend up, trend break, retest a new high, right? Trend up, trend break, retest new high. That's nothing that, that's normal, right? Trend up, trend break, retest new high. The market also moves in twos, right? How often do we talk about that? The market moves in twos. This is leg one. This is leg two. This is leg one correction. This is leg two correction. The market moves in twos, okay? And again, your best entries are on, off, or around the 21 EMA. So if you were scalping this, go right here, win. Go right here, win. Go right here, win. Don't do anything here because it broke through. But then when it gets back above the EMA, go right here, win. I mean, I don't know what else to tell you. I mean, it's just, I don't know what else to tell you. And then you get the real push pullback, right? try to go higher again, push back again, made another little high. So from this top, trend down, trend break, retest a new low. So now this correction market cycle is over. So we're looking for longs again. You may not want to take anything till you get back above the EMA, but you go right here, that's a win. Go right here, that's a homer. Go right here, that's a win. People, this is a whole separate market. This is the futures market. I was just showing you options market, binary options market. This is the futures market. 21 EMA. This is on a 2000 tick chart. Okay, I was just showing you a 1 minute binary options chart. So listen, from what I've seen, and then I do the same thing. Well, I don't do the same thing, but I also put the 21 EMA on my 4-hour Forex chart just to be able to see the market cycle and the legs also. So this indicator works everywhere. It's from what I've seen. Okay, from what I've seen, you can, whatever time frame you would like to place it on, it's still going to show you what's currently happening on that time frame. All right, again, this is a 2000 tick chart. I just showed you a minute chart. The 21 EMA is the best, most powerful indicator any trader could use and should use. And I mean, I like a clean chart, so I don't have to pair it with anything else, you know, other than a tool like the Fibonacci retracement or like these legs. So what you could have done was drew this leg right here, waited for the 2-leg pullback. So when you're just thinking about entering right here, now you have a target. You see what I mean? This gives you a target. Understanding the market cycle, understanding that the market moves in a rule of two. All this stuff gives you targets now. So when you enter right here, I mean, in futures, this is, man, if you take this one right here, you get your runner. And this is a beauty. Okay, that is a beautiful trend up. That is a beautiful retracement, second leg trend up. So if you can spot a trend, wait for the correction, wait for everybody who has bad common trading knowledge to counter trend trade and push prices back down. And then when big money puts in another order to start the second leg, go with smart money. All right, trade retracements, buy low, sell high. All right, and remember, and please do remember, your best entries are on, off, or around the 21 EMA. All right, that's gonna wrap it up for this work study lesson. That's gonna wrap it up for this series. I hope you have truly enjoyed it. If you missed part 1 and part 2, definitely go back. I think we dropped some gems on this one. All right, so if I earned that like on this series, will you guys please like it? Will you guys please comment? Let's make this one go viral. All right, your boy ain't had a viral video. I have not had a viral video, and I put 450 of them out there. All right, and I think we got some pretty good content here. I don't know what the deal is. You know, I'm not a marketing guru or nothing like that. You know, I'm just a dude who like to trade. So, you know, I got to get my marketing game up, I guess, so I can help more people. But hey, look, you guys help me out. Hit that subscribe button, hit that like button, hit the comment button. That's all I know to tell you to do, you know. So I appreciate you. And again, I hope this series really opened up some eyes. I hope it improves your trading, and I hope it takes your game to the next level. All right, so I'm gonna sign off with that. I appreciate you. My name is JD, and as always, I wish you increase on the Sutton. Bye-bye. If you need to learn more about the 21 EMA, watch this video right here.